Hi, welcome to the Market Alert for Thursday, the 6th of May 2021. So the Fed finally gets some tough questions and fails to answer them. That's because they haven't got any answers. Simple question: when will the economy be able to stand on its own feet? Well, it's not been able to do this since 2009 when they started printing QE. And as I said yesterday, they'll do anything they can to keep the illusion alive that all is well. And they do this by keep pumping into the stock market, keep pumping prices to all time new highs, which is what we saw again yesterday as well. So Janet Yellen yesterday was flip-flopping all afternoon, answering questions, and eventually boxed herself into a corner. She knows it, Powell knows it, and anybody in the US government knows it, that it is an absolute disaster, and more importantly, incredibly fragile. And I think the subheading is actually better: what a circus, because it well and truly is, with what they've done for the last 13 years. It's despicable, with printing money into oblivion, basically. And of course, now they're going to destroy the middle classes, the working classes, with inflation. And not only that, stagflation as well, which means the economy is going to falter, but prices are going to rise. So there's no end to this madness. It says here another concern is prices, with a record increase in service sector charges, highlighting how inflationary pressures are by no means confined to the manufacturing sector. And again, it's a bit like COVID rules. They're never temporary. Anything that's brought in by the government that says is temporary, it never is. And in inflation terms, they talk of transitory. Well, this is not transitory. This is the Fed's way, the underhanded way of trying to get out of some of this debt, or to at least mitigate some of it. A shocking disgrace is what it is. Implied volatility slightly down yesterday as the Dow went through the all-time high. No surprise given the sideways range, and as I've just stated, the incredible desire by the US government, but it doesn't matter who is there, and by the Treasury and the Fed, to keep pumping the markets to the upside. Overvalued valuations are off the charts, but it's going to continue until it can't continue. Simple as that. And news today, it's Thursday, so what have we got? The main event is the Bank of England Monetary Policy Report. And Lagarde is also speaking at 12:15 as well. But mainly UK news today, starting at 9:30 a.m. with the final services PMI. So let's have a look at yesterday. We'll start off with the Dow. The sideways move that we've seen has now been broken. Yesterday the market traded through this but closed back below it. But overnight the market is currently trading above the all-time high of 34,253. So a new, the old all-time high, I should say. And the new one, let's just mark this up, is 34,330. And again, the market, no doubt, will take this out later today as it continues this ridiculous highs, as you can see there from the monthly chart. Just a vertical rise from last year's pandemic, you can see there, and then continuing to move to the upside there. So relentless in their objective of keeping the illusion alive. Simple as that. There's no other explanation. Meanwhile, in the DAX, yesterday, as I said, they'll do anything to bring the market back, and they did it by the shed load yesterday. What I did was draw from this high to this low of the same bar, and you can see prices coming back to 78%. I meant to do this yesterday morning to give you targets on the upside and forgot. But once we get through the 89, then what I will do is this. Well, I'll do it now. But I would look at this high, this low. This is the last high that was left behind, from this high down to this low, and draw these in as well. In fact, we could probably use those now. So let me just get rid of the other fibs that I've drawn in, and that will give us much of a better idea. So we're above 62 now, and the 78 and 89 will be the upside targets, along with a close back above the 20 bar moving average there as well, which will be required. And overnight, let's have a look. The market's fairly quiet. A bit of a sell-off initially that we can see there. Market moving up 40 points and then back down 40 points, well 50 points, so just sitting at yesterday's close. But currently having traded above this and above the 200 MA now for the German DAX. So let's compress it a bit further, have a look, see what we've got on the upside as the market seems determined to move to the upside. We've got yesterday's high to take out, and then we head back up to the R1. And let's see how this ties in with the 262, ties in with the 78. So it's between 78 and 89 should the market move higher, and also the 20 bar moving average as well. So the R1 level is the one to watch out for. The prices move to the upside. And in the metals, well, I'm happy to be wrong when it comes to the metals in the analysis. Let's just go to silver. Yesterday, I was expecting the weakness to continue from Tuesday, and no sign of it. The market turned around and moved back and closed above the 5 bar moving average, which was good to see as well. So like I say, I'm happy to be wrong in this. What has happened to the shakeouts and the slams? You can see them overnight. You're getting these small ones, and if we look at the 15-minute chart, we can see a better idea of this. I mean, this is the last one that we had on Tuesday that was anything significant. We then had this one yesterday morning, and overnight we've had this one as well. So they're still trying, but it looks as if every time they do this, it's bought back. So I'm just hoping that there's a switch from the bankers now from the short side in the derivatives to the long side, because I don't think I'd ever hear myself say this. It won't come down. Those sort of big shakeouts that we've seen of several dollars per day have seemed to have disappeared. I don't want to speak too soon, and I don't want to sound pessimistic, because as I've said before, I'm an optimist, but I've traded the silver market since 1993, and there is a set pattern in slamming any move to the upside, because obviously it's going to impact on the view of economists and anybody with half a brain cell that can see that silver or gold rising says there's a problem with the underlying economy and the financial system. So like I say, maybe the time has arrived or is arriving. So yeah, this is fine by me. I don't have a problem with seeing prices being moved to the upside, and I'll continue to add to the positions that I've got, whether they have small pullbacks or they do decide to slam the market. Meanwhile, the dollar has had a bit of a move to the upside, and has got this sort of triangle pattern there, and could quite easily break to the downside as well, which it would need to do in order to support both the gold market, which too is moving to the upside, and also silver. Closed back above this 89% retracement from this high to this low is required, and then of course we've got the high that was made last week, which also ties into this area as well, and the 89%. Just a quick look at that price, and draw it across. You will see that it's nearly $1,800 an ounce. That needs to be taken out, and there you can see actually it's just sprung off the page. The 89% is $1,800. The close back above this is required. Now it makes sense why we stalled at this area. So yeah, the close above 1,800 will help to move us back above that all-time high that we saw last year, when gold actually traded above the 2000 level, and then was acutely slammed back too soon, obviously, to allow it to run to the upside. So yeah, still a good buying opportunity in gold for the upside there. Okay, let's have a quick look at yesterday's action. Like I say, I've been busy working on the software, so I've not updated this with any great detail because of working on the changes to the software. But yesterday we see the market moving up 50 points straight from the off, as I said in yesterday's market alert. So the They will want the market up after a big move down on Tuesday. Wednesday, it's a given they're going to move the market to the upside and try and hold it. And there you can see 100 points straight up. And again, just look at that 5-bar moving average. As soon as prices close back above, when it's closed below, they move the market back to the upside. At some point, of course, you are going to see prices run out of steam. And there's going to be a pullback and a rest. And then we see prices once again moving to the upside and taking out the high to the left. And then we head towards the news as prices also pull back. But again, once you've taken out those highs to the left, you can expect some sort of a pullback. And then we see the market this time, when it closes below, it does close back, but then it starts to close back more frequently. Below that 5-bar moving average, again indicating there's going to be some sort of a pullback and weakness. And then in the afternoon, as we just move on there, we can see prices continuing to move throughout the morning, and the afternoon no different. We had a potential sell signal, and on this one I was actually paying attention and didn't take this because we got news coming out shortly, and the market drifted sideways to higher. The news, I can't remember what it was now. I can have a quick look just to remind myself what it was. Yesterday it was services, and it came out just slightly lower than forecast, and this was enough to give the market a bit of a shakeout, as you can see here. And then they just buy back there, which you can see. So we had this quite a sharp sell-off, lots of selling in the lower window there, and then we see the shorts taking the profits on the trade and then bringing the market back. And as an attempt to move higher there, a bit of a struggle initially, and then we're off to the races. And the market again waiting for the crude oil news, and then eventually the news comes out for crude oil, showing a bit more demand, and prices continuing to move to the upside, which is what they did for the whole of the afternoon. If you look at this in the 5-minute chart, just bring this up, drag it over, you'll see it was one way as prices continued. Whoops, that's not the afternoon, is it? That's oh no, that's right, because I've got the whole of the chart showing. So the afternoon was here. See the market again push that shakeout, and you can see that the volume is the highest volume bar for the day here, and then we get a retracement, and then off we go. And these are a lot more clearer to see in the longer time frames, where we get the pullback and then off to the upside. And again, just notice how prices stay above the 5-bar moving average once they break above this, allowing you to stay in the trade for bigger profits. Okay, that will do it for today. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.